Electricity inflation is quietly becoming the next major economic headline, yet many haven't fully grasped its enormous implications. While oil prices have long dominated discussions about energy costs, electricity is rapidly stepping into the spotlight as the core driver of global energy demand. This shift is especially fueled by the explosive growth of artificial intelligence, AI, and the expanding network of data centers worldwide. Countries like China and Saudi Arabia are responding to this surge by heavily investing in nuclear power and solar energy capacity, aiming to secure their energy futures. But here's where it gets controversial. Electricity prices have risen nearly 35% since 2020, compared to just 12% in the entire previous decade, signaling a trend destined to grab much more political and investor attention very soon. Peter Cheer of Academy Securities recently highlighted some compelling data that caught their eye, and ours too. A chart tracking tariff revenues and energy pricing underscores a crucial pivot taking place. Energy today means electricity more than oil. Investors, companies, and policymakers need to shift their thinking accordingly, because the age of oil is increasingly giving way to the era of power, particularly electric power. This isn't just about changing fuel sources, it's about the entire structure of how the world powers its economies and technologies. Look at nuclear energy. China is accelerating nuclear reactor projects aggressively. This is more than a footnote. It's a strategic move with profound implications. Meanwhile, Saudi Arabia and other Middle Eastern nations are striving to become global hubs for data centers. Transporting oil is costly and complex, but moving data requires vast amounts of electricity, plentifully available through solar energy in these sunny regions. Moreover, by importing cutting-edge chips from American manufacturers, these countries not only boost their technological capacity, but also address trade imbalances. It's a win-win strategy that could reshape global energy and tech landscapes. What does rising electricity cost mean for the AI sector? While there's no immediate threat to AI budgets, there could be longer-term economic pressures. Higher power bills might squeeze margins or slow investment if energy prices climb too steeply. However, this challenge also presents enormous opportunities in electricity generation and infrastructure development. Politicians and investors are beginning to notice, which is why we expect the electricity story to intensify in the coming years. On a more personal note, the rising importance of electricity consumption is something even smart home technology users can relate to. I'm currently locked in a losing battle with my so-called smart thermostat, which seems determined to crank up the heat relentlessly. Each software update only makes it sneakier, driving up power use and my irritation. My experience might seem trivial, but it reflects a broader truth. As devices become smarter, they also often demand more energy, sometimes unintentionally. To put this inflation in perspective, electricity costs rose less than 12% from 2010 to 2020. Since then, that figure has skyrocketed to almost 35%. While we all notice gas prices, because we fill up frequently and see prices posted, electricity bills tend to be less visible. They arrive monthly and can be easy to overlook. But with such a steep increase, expect conversations about rising energy costs to dominate headlines and dinner tables alike. In fact, one analyst predicts that this electricity price chart will soon become one of the most discussed visuals on financial platforms. As electricity prices climb, the incentives for investment in power generation and new technologies will grow. It's unlikely to directly curtail AI spending anytime soon, but the industry must remain vigilant and proactive. After all, why should countries like Saudi Arabia, flush with solar potential, become dominant players in data infrastructure? Could this power shift raise national security concerns? These are important questions to ponder. Finally, a quick word on inflation measurements. There's reason to believe the official Consumer Price Index, CPI, understates the real-world impact of electric bill increases on everyday consumers. Many of us feel the pinch more acutely than the numbers suggest. So, what do you think? Is the world focusing too much on oil prices and neglecting the seismic changes in electricity costs? Will soaring power prices shape or shake the future of AI and tech hubs? And could this signal a geopolitical shift as countries with abundant renewable energy seek greater influence? Share your thoughts, agree, disagree, or add nuance. Because this next wave of inflation and energy transformation is just beginning to unfold, and it affects us all.